Alright, so my voice is still a little bit hoarse, down with like a little bit of flu, cough, whatever, everything in between. Not COVID though, I checked multiple times. But anyway, we need to talk about earnings, okay? And of course, we have to talk about Apple earnings, Google earnings, Amazon earnings, and Meta platforms, also known as Facebook. Okay, but anyway, in this video, I'm most likely going to be coughing quite a little bit, so I do apologize beforehand. Okay, so anyway, let's get down to it. Alright. Apple, Amazon, all of them actually posted disappointing quarterly result this week. Okay, so Meta platform actually surprisingly was the only one that surprisingly went up in terms of giving us actually good results. Okay, you can see that Apple reported its first revenue drop in nearly 4 years after COVID-19 restrictions on its factory in China. Okay, they actually talked about how they have a quarterly profit decline of $30 billion. A 13% year-over-year decrease. This is the first time in 7 years that earnings actually fell short of market expectation. So this is actually quite huge. Okay, Apple usually do not miss, which is why Apple is this high-level blue chip company that everyone always constantly buy into. And it's kind of funny, okay, because they actually missed on earnings and they actually went up in price. Okay, they actually went down in price, and the following day it just went back up in price. Actually, right now Apple is like back to like 152 or something ridiculous again. Okay, completely not like how we saw back in 2022. The early 2022, where you get a huge miss, you just suddenly lose like 15% of your equity completely. Okay, it's not the case anymore, especially for big companies like that. Okay, that's kind of like the cycle that we actually saw back in late 2021 and early 2022. So, Apple over here, they actually signal that they do not have any sort of intention to resort to mass layoff like all the others. Okay, so for example, if you actually look at Alphabet, you look at Meta Platforms, you look at Snapchat, you look at any other companies out there, any of the tech giants out there, they are laying off workers like crazy. Okay, for them, they are saying that, we manage for the long term. And they are actually investing in innovation and people. Kind of ironic because, let's be honest, Apple hasn't really been the most innovative one of them all ever since we actually get the iPhone. I don't think there's much of innovation actually happening, but I think they actually have a insane model for the whole entire environment. People who actually get into the Apple environment cannot leave the environment. It just makes us want to pay more and more. Now we have to talk about supply and demand for Apple. Supply side, Apple is already investing a lot more money for them to actually create more factories. Right now, they're actually thinking about getting into India for them to create more factories so that they can actually branch out from China so that they do not have so much dependency on one country in particular. They want to branch into India so that way they can actually have more supply chain and less supply chain issues. Demand-wise, they are actually thinking that it's not going to be that big of an issue. Demand, they are thinking that people probably think that their phone is one of the most important thing in their life, and they wouldn't mind paying a little bit more for a better phone. Okay, so of course they could have your SE model, which is your bottom of the line cheapest iPhone, and at the same time they can actually explore different options going up to the Ultra Pro Max XE 750, I don't know, get the best model, cost you $3,000 or whatever it is. They can easily do so, and people are still going to buy those phones. Okay, that's where Apple demand is so strong. Now we have to continue talking about Google. Okay, Google actually posted lower quarterly profit, a smaller revenue increase, and a decline in online ad spending and competition from rival weigh on the search giant. So for people who do not know, okay, I actually watch a lot of different YouTubers, ranging from financial YouTubers all the way to people like Mr. Beast, and a lot of them usually talk about revenue and things like that. And a lot of them are actually starting to put out some of the kind of information saying that, we are starting to see a little bit of a revenue decline from the AdSense from YouTube videos and such. From there, you can kind of see that Google is not exactly paying the creators as much. And also at the same time, you also have to take into consideration that YouTube, which is part of Google, they're actually starting to want to pay creators for YouTube Shorts. Okay, that's going to be taking out another huge chunk of the money from the company itself. So it's very, very important for them to actually siphon and budget their money properly and know where to actually go up to. So, because of that. I think it is it's possible that that's one of the headwind for Google. All right, you can see advertising revenue fell by 4%. Revenue on YouTube declined 8% year over year. Smook Investor, who said the stock actually lower in the after hours earning, like I said before, Google actually went down, but it doesn't really matter. Macroeconomics actually is going up, and people are still buying the stock. It doesn't really matter. I would actually be posting another video, possibly after this, or you're probably going to be watching this on Wednesday, so I'm going to be posting one on Saturday talking about how you might not want to actually be buying on this dip because it might actually be dangerous. But more on that for the next video. All right. So Alphabet also earned $13.62 billion in the October to December quarter, a 34% from the same period a year earlier, which is a 34% increase. Honestly speaking, year over year, 34% increase is pretty good. Revenue inched 1% higher. Google is now facing competition in artificial intelligence from Microsoft, which last month announced is making a multi-year, multi-billion dollar investment in OpenAI, also the creator of ChatGPT. Okay, I actually have a video regarding this whole entire ChatGPT. Is it going to be rivaling Google and things like that? Honestly speaking, I don't think it's going to be rivaling Google, but if Google want to destroy ChatGPT, they can just create their own artificial intelligence, AI learning machine, and they can do basically the same thing or even better because they have a lot more resources on hand. Okay, it's true that they might actually need more time on their side for the machine to actually do all the learning and such, but I feel that Google is most likely going to find a way to get across that obstacle quite easily. I don't think it's going to be that big of an issue. Something that you might want to take note of, but again, like I said, I don't think it's going to be that big of an issue. It's true that Microsoft is taking this chance to really get into ChatGPT, but right now I don't see how ChatGPT can be opened up into this whole way to monetize it, because if you're going to be using ChatGPT every single time and it gives you any sort of advertising, it's going to be very weird. You're going to get very bad results and things like that. People are going to stop using your ChatGPT as a whole. So I think it's not going to be the best. Okay, but something you have to actually look into. All right, now let's move over to Amazon. Amazon reported worse than expected fourth quarter profits, while its operating profit could fall to zero in the current quarter as savings from layoff do not make up for the financial impact of customers clamping down on spending amid high inflation. Amazon also one of the only few companies that is actually still talking about inflation in this current whole earnings cycle. A lot of companies are already over the whole inflation thing. All the companies are actually learning. All the companies know for a fact that, okay, you know what? We know from inflation, we know that supply chain is going to be affected. We are going to be investing more into creating factories, creating more production line, creating all these manufacturing lines for us to ensure that our supply is going to be keeping up with the demand. Okay, people are already learning from their lesson as it is. Inflation is one of the last few things in their mind. Okay, and at the same time, people are easily still paying for all these different products, be it services, be it actual products, groceries and things like that. As it is, they're still going to be paying as it is. So I'm not sure if inflation is going to be that big of a concern moving forward, especially for the next 3 to 5 quarters. Okay. But understandably, I can see why Amazon is kind of worried, because they probably have a bad quarter. And again, like I said before, I have said this multiple times, okay? But you can see over here, its revenue beat expectation boosted by sales in the cloud computing unit, AWS. I've said this multiple times. If Amazon one day actually wants to separate Amazon as a company and AWS as a different company, I will invest so much money into AWS, you are not going to believe it, because AWS is such a crucial part of Amazon. If Amazon do not have AWS, I can tell you that Amazon is well on its way to bankruptcy. Okay, Amazon is trying to fight this whole new battle of who can actually get a product to in front of a user in the fastest time possible. They tried to do this 3-day delivery thing, down to a 1-day delivery thing, down to a half-day delivery thing, down to a 3 hours delivery thing. I'm not sure if I'm gonna be that comfortable in taking part in such a long winded battle, because just because you're fast doesn't mean that people would necessarily want to pay for it. For example, if the cost for you to actually bring the thing in front of me in the next hour, okay, and the cost of that as compared to bringing that thing to me in a day, if the cost is going to be a lot more inflated, chances are I'm just going to pick the 1 day delivery instead of the 1 hour delivery. Okay, of course there are going to be people who do not really care about it, and people are willing to pay for the 1 hour delivery. But honestly, I think the cost basis doesn't really make sense, and because of that, I think Amazon is not exactly a really good company for me to invest in. But of course, like I said before, this is only for me. I'm not sure, you might be interested in Amazon. Hey, I don't know. I don't think Amazon is going to be that good of a company for me to really get into. Alright, next up, Meta moves to reigning costs. Okay, honestly speaking, Meta actually kind of missed on multiple fronts. But the only reason, okay, I will actually come down with this report. Okay, but one of the only reason why Meta actually went up greatly, about like 20% in the aftermarket, after which they actually got a lot of increase as well. The only reason is because they did a huge stock buyback. After having a layoff of about 11,000 job cuts, they actually went through with a $40 billion stock buyback. And that alone is like good enough. Oh, hold on. Yeah, that alone on its own is good enough for you to actually bring the stock back up all the way. Okay, people, because if the company itself actually thinks that Meta Platforms is going to be performing a lot better in the long run, generally you are going to see a lot of the shareholders also try to get in on the fact that they are most likely going to see the stock go up as well. But anyway, that's all we have for the major giants, tech giants earning. I'm going to be making a video about why it might actually be quite dangerous for you to go all in on this. I'm sorry. Why it might be quite dangerous for you to go all in on this market. I think that this current market is going to be slightly dangerous for you to just go all in on. We currently don't really have a Fed pivot or any sort of signals showing that either. By the way, I'll leave that for the next video. Check out that video when it is out, maybe on Saturday or something. But anyway, that's all I have on this video. Thank you so much for watching, and I'll see you guys in the next one. Bye.